What's going on, guys? Welcome back to the channel. Let's take a quick look at the markets here, because yesterday's video we were looking for a potential reversal coming up to this area here in this price action, and we were looking for a pullback to our support zone that was around the 23 to 38.2% retracement of this rally. Okay, now the markets kept on pushing on higher, and that's quite all right. There's nothing wrong with that. That only signals that this is confirming the impulsive structure that we've been tracking post March 14 pivot point. Okay, now if you're new to the channel, guys, what we do here is we review the markets using our preferred method of technical analysis, which is the Elliott wave principle. Okay, guys, so let's dive into the analysis, and before we do, subscribe to the channel and give this video a thumbs up. So let's take a look at the markets from January the 4th to February the 24th low, because all of this here at Trending Waves, we've been calling this as a corrective move in the wave 4. If you guys remember, taking you guys up to the daily time frame, our stance remained that this was the wave 1, the wave 2, the 3rd, and the 4th. Okay, and now we are impulsively breaking out to the upside. Now there is a slight possibility that this is still a counter trend correction of this decline, meaning that if this is the counter corrective move, then this is the A wave, this is the B, and now we're looking for 5 waves down to the C. It is unlikely at the moment given the impulsive nature of this structure here. So for that reason, we are going to call this the wave 4. We are anchoring that move there, and what we're going to do here is that we're going to anticipate, or we're going to try to look for potential support areas that will give us the opportunity to take a trade and take advantage of the wave 3 to the upside. Okay, because the wave 3, as you guys know, is the longest wave that will give us the potential and the most opportunity for profit. Okay, guys, so let me take you back down to the 1 hour time frame, and let's turn on our labels here in the main count, and then we're going to review the bearish count. Okay, so here from our January the 4th high, okay, we still got the A, the B, to the C, to the W, 3 waves up to the X, A, B, C down to the Y, to the wave 4 at 38.2% retracement, which is the 412.71. Okay, we then got the wave 1, A, B, C to the 2, 78.6, 416.86 level, which is a deep correction, but not invalid. Okay, so now what we're trying to do is we're trying to confirm this wave 1. Okay, and I know that a lot of people have been missing out of this move, and they may be following and trying to catch positions to take you on higher, because truth be told, if we look at Apple, okay, if we look at Apple here, we are nearing its all-time highs. I mean, look at this, guys. Okay, look at this. We are plus or minus 2.5, 2.3% from its all-time highs here at 282, 283. So it's incredible, guys, that the market has rallied that much in such a short amount of time. I mean, our correction was from January to February, and now that took about a month, right? And this took about, several days to unfold. And that's what markets will do to you. So anyway, the objective here is to confirm this wave 1, okay? And then our main idea is to look for this wave 2 to give us the opportunity to the wave 3. Now, how do we do that? What we're going to do here, guys, I'm going to give you a quick lesson on how to spot this trend or this sort of market structure. So it is likely that we may continue higher into the 1618 or 466.32. Our trade over our Trending Waves, we took a SPY call to the 457. We got our targets and we took profits. That is discipline. Okay, I know the markets kept on going higher, but if you reach your target, then it is best to lock in your profits. Okay, because this could reverse at any moment. So we are confirmed the 1, 2, 50%, 3, 4, and then final 5th. Again, we may reach the 466. Now, levels to watch, and I'm going to take a quick retracement from the low of wave 2, okay, to the high of wave, from the wave 2 here, okay, to the high of wave 3, potentially this is it. And we're going to look at the 23.6, okay, and the 38.2. These are the first 2 levels that we're going to keep our eyes open for a 3-wave pullback. Okay, we would like to see markets roll over A, B, and C to hold this area. Okay, why do I say that? Because if we keep on heading lower and we break below the wave 1, which has always been the level that we've been looking for, or we've been tracking here at Trading Waves, because a wave 4 cannot retrace beyond the territory of wave 1, at least in the closing basis. We can't retreat beyond this point in this wave 4. So for that reason, this zone here between 450 and 444 should be a level that we must watch and must hold in order for the SPY or the markets to continue its trajectory to the upside. Okay, so as I've always taught you here in the channel, okay, once we find the zone of support, let's take a quick box here and let's look at the price history to see where zones of support and resistance, and if this area here matters in terms of its price structure and its history. So as you can clearly see here, guys, this area, while, you know, in terms of support, it serves between the zone here, resistance here, support here, resistance around here. So it is likely that once we roll over and we find ourselves within this box, that buyers are going to find this zone as interested and then take advantage or take positions to give us upside opportunity. Now, we may take a trade around the zone to give us one last push into the wave 5, or we may wait for this 5 to unfold, because one or two things can happen. This wave 5 can truncate and we may find the wave 1 to be shorter, or this wave 5 can finish anywhere between the wave 1 and its higher Fibonacci objectives, which we'll retrace it once we see this wave 4 completed. But the real big trade and really good opportunity will come once we see this retracement here. So if you miss this rally, all right, if you miss this push, just wait it out. Okay, preserve your capital, because the real opportunity comes when this wave 2 unfolds. Okay, guys, now taking a look at our bearish count. Okay, I'm just gonna delete this because the bearish count is still at play. Let's see here. All right, the bearish count here, we are at the 786 at the moment, okay, which is a retracement from the wave, the initial wave A, okay, to the wave B. 786 is not out of the question for a wave B pullback. Okay, now this area serves as a good resistance zone. Okay, as you can clearly see here. Okay, this whole price structure was hovering or like wrapping itself around this zone. So it is likely that because this was support, that this area may act as its resistance, and we're gonna see a rollover. Now, how do you confirm between the two counts which one will be at play? As I've already mentioned, if price structure breaks below the wave 1, which in this case, in this count is the wave A, then it is confirmed that this is the count. Okay, but if we remain above this zone, okay, 440 and 434, then our bullish count is at play. So the best case and the best scenario here is to just wait for that pullback. Okay, wait for the A wave of 4 to confirm. The B will confirm the trend, and then the C wave to the decline will really give us an idea of how deep this correction is going to go, and we'll position ourselves to the upside with minimal risk. Okay, guys, so you got your marching orders. Watching the zone 464, 457 in this count will be key for us to understand whether or not the markets are going to roll over to the Qs. Same deal. All right, nothing really changed except that markets keep them pushing on higher. So in this correction, this is our bearish count: 1, 2, 3, 4, 5 to the A, B, and C to the 618. Now we're finding out a bit of resistance. I mean, the futures market are pretty flat at the moment. Let me take a look here on my phone because I closed trading. Think we're showing on my computer. So you know it's pretty flat. So we may get a push higher, and then we may see a fade towards the end of the week. Okay, at which point the following week or the following 2 or 3 sessions, following week or two may be a correction unfolding. But looking at our bullish count, okay, the main count will suggest that we are nearing the wave 5 of 3, okay, because we surpassed our resistance zones, and we are also experiencing a bit of divergence. Okay, we see an extreme in RSI around its wave 3, and RSI is just barely making um, the top here, okay, in the 1 hour time frame, while markets are still making a push higher. So the way we're going to look for trading to trade this area here, that we're going to wait for this wave for a pullback. Then we're going to wait for this one to complete. The wave two here is where we will likely see a push, a positioning, because the wave three of the intermediate degree is going to give us the best trading opportunity, guys. All right, guys. So I hope you guys are excited. A chart that I want to show you guys that is showing pretty good, a pretty good potential breakout is that of the IWM or small caps. Yesterday's video, we were looking at this zone to be of critical resistance. Why? Because critical resistance will support for almost, let's take a look, for almost 290 days, 371 days rather. Okay, 371 days, price structure and IWM kept on hovering above this zone between the 211 and 208. Now for IWM to find itself breaking out, because what we look here, this could potentially be the 1, 2, 3, 4, and 5, or we may be in the 3 and the third wave, 1, 2, and 3, a third of the third, which will likely give us price action heading on higher. So what could potentially that be? Okay, so if we take an extension from the high of wave 1 to the low of wave 2, it is likely that this will be an extended wave, right? So a 1618, it's possible. Okay, if by any chance you guys get to catch this trade, congratulations. But if you miss it, I'd wait for this pullback to retest this zone. Okay, once we find a retest of this zone, man, IWM is going to rock it. Okay, guys, so just be excited and wait for this area for this pullback. Should markets keep on getting keep on pushing on higher towards the 221 region, maybe the equality here, but I think we've already surpassed it, as you can clearly see. SMH is moving beautifully according to our waves count. Okay, so we're looking for the 286, 283, as we mentioned previously, and the true test will be down here. So this support zone will likely come towards the 23 to 38.2% retracement. Okay, so 272 and 265 is a key zone for us to be aware of in order for us to determine whether or not we are within a wave 2 pullback, or this is in fact going to be a deeper correction and we break the low here. Unlikely because of the 1, 2, 3, 4, 5 waves clearly to the upside. And let's take a look at one chart that was requested. I think it was IBX or no, XBI. There you go, the Biotech ETF. So this was a request from a viewer, and I hope you're watching this. So let's take a look at the weekly time frame, because this chart is a bit of it's trading patterns basically. All right, so the way we're looking at this guy, this chart here, is that from its April low of 2009, this is 1, 2, 3, 4, and 5 to the A wave, A, B, C to the B, and now we're looking for move lower, 1, 2 to the 3. All right, the 3, as you can clearly see, is holding this trend line support, and we may see a push onto the fourth wave, which is a quality also of wave 1 and wave 2 at 90.24. If we end up losing the zone here, then it is likely that our next target is down to the 69.90. Otherwise, you got to watch for the zone. If the wave 4 ends up breaking above and closing above this wave 1 at 117.60, then it is likely that the B wave has completed, and now we are looking for the wave C to the upside. And normally wave C's will unfold in 5 waves. So otherwise, wave 4 will retrace below the wave 1, and then wave 5 will get us down towards the 40 to the 35 region on the this ETF, okay, the Biotech ETF. Okay, so I hope this was helpful. Let me know if you guys have any questions. Shoot me a comment down below. Look forward to interacting with you all, and as always, thank you so much. Let me see if I missed anything else that I want to review with you guys. I don't think so. All right, guys. So maybe the chart of oil, just quickly touching base on it. Let's take a look at oil on the daily time frame. So oil, until we break above this trend line, I still believe that this wave 1 completed here on March the 22nd. We have evidence of 1, 2, 3, 4, 5 waves to the A. We have evidence of 3 waves to the B. And now we're making our way down in 5 waves to the C of wave 2, which we should come to equality of wave A and B down to 83, 86. If not, if we end up pushing on higher, I'd watch for this trend line to break. Okay, we break, retest, and then we go. That means that this would be the wave 1, 2, 3, 4, and 5, and then we've completed the wave 2 here. Okay, and that's it. And then we'll resumption to oil, and obviously we don't want that because it doesn't help. We want oil to go lower, guys. All right, so that's it for me tonight. I hope you guys enjoyed this session. Let me know if you guys have any questions. Leave your comments down below. See you guys tomorrow. Take care.